Students, the time to talk about Meta has finally came. This is the time to buy Meta. In this video, I'm going to break it down 4 reasons why Meta is in a massive buy territory right now. And the last reason is what I believe will continuously send Meta to the moon in the long run. So watch until the end and let's cut to the chase. As I'm making this video, Meta is trading around the low 600s per share, which is a meaningful pullback from its recent peak near 800. That matters because the question isn't whether Meta is good. The question is whether the price is now giving you a better deal on a business that still compounds tremendously. Let's start with the first reason why it's a buy. Meta's social ecosystem is still dominant, and there is no single challenger that can replace it. Meta's family of apps has around 3.54 billion active users. That's not monthly, that's daily. And the ad engine is still strong enough that in the most recent reported quarter, ad impressions grew 14% year over year, while the average price per ad grew 10%. Those two numbers together are the cleanest signal you can get that engagement and monetization are both working at the same time. The point isn't that competition doesn't exist. Of course it does. The point is that no competitor has Meta's full stack. Facebook, Instagram, WhatsApp, Messenger, and now Threads sit across different age groups and different use cases, and that kind of diversified attention is just incredibly hard to displace. Instagram is a perfect example. Meta says just Instagram alone has reached 3 billion monthly active users, and that is scale that very few consumer platforms on Earth can match. Now zoom in on the engagement flywheel, because this is where the durability comes from. Meta has been using AI-driven ranking and recommendation systems to keep people inside the ecosystem longer, and short-form video is the best proof. Reels started as a TikTok defense move, but it has become a serious monetization engine, and the broader takeaway is that Meta's AI systems keep improving the core product experience, which keeps the ad product valuable. And don't underestimate WhatsApp. WhatsApp is not just messaging anymore. Meta has started rolling out ads in WhatsApp status and is building out channels and subscriptions. That is a direct path to turning a massive consumer utility into a growing business platform without breaking what users love about it. Now, the second reason Meta is a buy is that it has positioned itself as a serious AI leader, not just a company that uses AI. Meta is spending aggressively on AI infrastructure, and it's building its own foundation models through the Llama family. Meta has said its Meta AI assistant was on track to become one of the most used AI assistants, reaching close to 600 million monthly active users by the end of 2024. That matters because distribution is the hardest part of AI. Most AI companies have to pay to acquire users. Meta ships AI to billions of people by default inside the apps they already open every day. That is a structural advantage other companies such as OpenAI cannot compete. Meta is also willing to buy capability when it accelerates the roadmap. Reportedly, Meta acquired an AI startup called Manus for about $2 billion, which fits the pattern you're seeing: less metaverse, more AI, and faster execution. So that's the core of the bullish case so far. Meta still owns the attention, and Meta is building the AI layer that will increasingly decide what people see, what they buy, and what advertisers pay for. Now let's talk about the third reason Meta is a buy. The financial machine is still extremely strong, even while the company spends heavily on AI. In the latest reported quarter, Meta did about $51.24 billion in revenue. It generated about $10.6 billion in free cash flow in that single quarter, and it finished with about $44.45 billion in cash, cash equivalents, and marketable securities. Meta also returned capital while investing. In that quarter, it bought back about $3.16 billion of stock and paid about $1.33 billion in dividends and dividend equivalents. The dividend itself is currently 52.5 cents per share per quarter, which is $2.10 per year. The point is not the dividend yield. The point is shareholder behavior. This is a company that can reinvest heavily and still return cash. Now let's talk about earnings power, because people get confused by one-time items. That quarter included a one-time non-cash tax charge of about $15.93 billion, which made the reported net income look artificially low. But excluding that one-time charge, Meta said net income would have been about $18.64 billion, and diluted EPS would have been about 7.25 for the quarter. So from a fundamentals perspective, the ad engine is strong, the cash generation is robust, and the company is still buying back stock and paying a dividend. And for Q4 2025, analysts expect Meta Platforms to report EPS of approximately $8.19 to $8.29 and revenue between $56 billion and $59 billion. Then we get to valuation and why the pullback matters. At current levels, Meta is around a 31 times price to earnings multiple. That's not cheap like a dying company, but it can be reasonable for a business with this scale, this margin structure, and this growth runway, especially if you believe AI will lift engagement and ad efficiency over time. And remember, the pullback matters because risk is not just about the company. Risk is also about the price you pay. Buying a great business at a stretched price can be a bad investment. Buying a great business after a meaningful pullback can be a very different trade. Finally, the fourth and the biggest reason why I think Meta is a buy now, it's the most surprising one: power. AI is not just software, it's electricity, land, transformers, and long-term energy contracts. The power and electricity required to power AI is beyond imagination. Meta says this, and it is building for a decade, not a quarter. Meta just announced nuclear energy agreements that could unlock up to 6.6 gigawatts of clean power by 2035. It's also tied to a major AI data center build-out, including a roughly 1 gigawatt Prometheus facility in New Albany, Ohio, that is expected to come online in 2026. Meta entered into agreements with Vistra, TerraPower, and Oklo, and plus the one signed with Constellation Energy last year. All of these make Meta one of the most significant corporate purchasers of nuclear energy in American history and the world's biggest nuclear-powered AI company. This matters because the next bottleneck in AI is not talent, it's compute capacity and reliable power. If Meta can secure long-term, stable electricity for data centers at scale, it reduces one of the biggest risks that could slow AI product rollouts. And Mark Zuckerberg is already making plans for Meta to own electricity for the next 10-20 years. In other words, while other companies are fighting for chips and grid access, Meta is trying to lock in the fuel source for its AI era. So that's the bullish case. Meta owns the attention, it's building a real AI stack with distribution, it has the cash flow to fund the capex, and it's literally securing power for future AI expansion. Now, what could go wrong? One risk is spending. Meta guided 2025 capex around $70 to $72 billion and said 2026 spending growth is expected to be notably larger. If the market turns against big capex narratives, the stock can re-rate down even if revenue is growing. Another risk is regulation. Meta continues to face privacy, competition, and youth safety pressures across regions, and those can force product or ad model changes. But if you ask me, after a meaningful pullback, Meta looks like one of the cleanest large-cap ways to own the intersection of social attention and AI, backed by real cash flow and long-term infrastructure planning. At the end, I do want to say this: if you are buying Meta with me, be sure to watch engagement and ad pricing, because that tells you the core engine is alive. Watch CapEx guidance, because that tells you how aggressive the AI build is getting. Watch buybacks and dividends, because that tells you cash flow health. And watch progress on AI distribution and monetization, because that's the next growth leg. Once again, I'm Professor Portfolio. Thanks for watching. Please drop a like and subscribe. Tell me what you think about Meta in the comment section below.